This is Alan Bush with ADMIS. In the stock index futures, seeing prices a little bit better in the early part of today's trade. This seems to be follow-through strength from Bernanke's testimony over the last couple of days when he defended the Fed's quantitative easing program. Since then, though, we did have a couple of economic reports. We did have the fourth quarter gross domestic product report coming in up 0.1%. This compares to the estimate of up 0.5%. So that doing a little damage. We still feel that this market is very overbought, even though we have seen some new highs over the last couple of weeks. More recently, though, we have seen some technical damage done with last week's one-day reversal in some of the indices. Also, in Bernanke's testimony, at least as far as the question and answer period, he did say that he did not think that the stock market was in a bubble situation. So that seems to be somewhat of a worrisome comment as far as I'm concerned. As far as these elevated levels in stock index futures. Over in the currency markets, seeing the euro currency coming under some pressure. This after inflation in the Eurozone and also in Germany coming in weaker than expected. Of course, this hurts the euro from an interest rate differential point of view. Also with the US GDP coming in a bit weaker, we did see some pressure developing in the dollar index initially. However, since then we have seen the dollar advancing and trading higher on the day now and near daily highs. So the fact that the dollar index can ignore some bearish news has to be viewed as a sign of strength. So from here, I would look for further gains in the US dollar index. Also, we feel that the British pound and the yen, although they have bounced off of recent lows, that the main trend for both of these currencies is still lower, and I would expect pressure to develop over the next week or so. In fact, I think we can see new lows for the moves in both of these currencies longer term. In the credit markets, some strength coming into the treasuries, this after the gross domestic product, as we mentioned, coming in a bit weaker than expected. We are coming into some major resistance area in the June 30-year treasury bond, coming in at the 145 to 145.5 area. I think that is likely to be a resistance area that will hold. So longer term, we feel that the bull market is over in the treasury futures market. And any substantial gains, especially flight to quality gains, which I think are likely to only be temporary, should be viewed as selling opportunities in the credit futures market. Once again, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.